Hi, Tony here. US equities finished a July 4 holiday shortened week mostly higher, with the blue chip Dow Jones leading the charge. In our quarter three outlook on US indices written 2 weeks ago, we flagged some key risks for the quarter. And the first of those was the potential for a more hawkish Fed in the second half of 2026. However, Fed Chair Warsh's comments last week that inflation risks have eased, alongside a cool and expected non-farm payrolls reports, have certainly reduced those concerns. And today's strong gains in US equity futures appear to be a delayed reaction to that more supportive backdrop which emerged last week. However, risks around tech stocks and questions around valuations, CapEx and earnings have only really intensified. Let's take a look at the charts of the Nasdaq and the Dow Jones to see how they are lining up at the start of this new week. This is the chart of the Nasdaq 100, and what you can see here is that after this 35% rally over 9 weeks, the Nasdaq has started to correct those strong gains. And at this point of time, most of those gains have taken place within what I would call a bullish triangle. So what we look for now is, if the Nasdaq were to continue trading sideways, that's all well and good. But once it gets above this trend line and above these highs here in the 22nd of June and this high here from the 3rd of June, it would be the final confirmation that the correction is complete and the uptrend has resumed. I'll be looking for a move up into this 31,500 to 32,000 area once these levels are broken to the upside. Conversely, it is possible that during this period of consolidation, we do see another leg lower, and providing it holds support coming in around 28,000, you've got this low here from the 9th of June coming in just below 28,200. But providing it holds this low here, I still wouldn't have too many issues in my mind calling this a correction, and that once this correction is resumed, I'd be looking for new highs. For the Dow Jones, well, it has taken a similar path in terms of the rally from the March lows, but whereas the Nasdaq stalled and stopped, the Dow Jones has really continued. There was a brief pullback here in early June, held support coming from this psychological 50,000 area, and then the uptrend has resumed. You can see a very strong night on Thursday night as it pushed up towards 53,000. Now, that very impulsive rally which we saw on Thursday night certainly has, to a degree, erased concerns around bearish divergence. But what it hasn't done is it hasn't erased concerns that the rally is overbought. Now, being overbought doesn't mean that we're looking for an imminent pullback. It just means that we need to be mindful of where the risks lie. Now, in that context, for me, while the Dow Jones holds above this high here at 51,665 from early June, and above this low from the 23rd of June coming in around 51,300, I would be prepared to allow, or my view is that the rally should continue to push on higher up towards 53,500, possibly up towards 54,000. Conversely, if we were to break below this low here, a sustained break, then that would probably give us a fairly good indication that we have seen this rally run its course and that we're going to see a deeper pullback towards this 50,000 area. That's all for this update. Stay tuned for more ahead.